Hi everyone, welcome to the end, or nearly the end, of another crazy week in markets. What a Friday it's been so far today, eh? What a couple of days it's been. Morning, Kay.
Hey, good morning, Ryan. How's life? Oh my God.
It's another one of these ones, isn't it? You said it the other day. It's like we may have had end of month, but it's like we've been trading 2 months worth of stuff in one week.
Yeah, absolutely. I'm really close. My brain is overheating, and I think I'm losing a few pistons, and I'm so happy to go into the weekend and a long one. So yeah, we need a bit of rest and reset. I think so much stuff has been happening.
Yeah, well, I'm going to do that a bit early today as well. I'm off for a concert up in town. Pretty much as soon as the show's finished today, I'm going to be hopping on a train, going up to see Guns N' Roses. So I'm starting my weekend early. And
Lovely stuff, mate. I'm not jealous at all.
some photos. Right, so let's get into it. Let's, there's plenty of trading still to be done today. Lots of moves to be had. So let's crack into it and have a look at what's been going on. Quick run over the data, starting with yesterday's stuff. Obviously, PCE was one of the big numbers that we were waiting for yesterday. Came in strong. Okay, so it came in. PC came in at 6.3%, so matched the last month. Obviously, 6.3%. It didn't shoot higher, but it's still a strong number. It's still well above the Fed's target. But on the other side, again, we've seen a little bit of divergence between the headline numbers and the core numbers. Core actually dropped 2 pips from the prior month to 4.7% from 4.9%. Now, why is this important? Well, the headline number in all these CPI metrics, inflation metrics, obviously contains everything. So it can have that greater influence of volatile numbers like energy and so on and so forth. Whereas the core number tends to strip those parts out, the more volatile stuff, gives you a more, if you like, domestic look at the price pressures. Now, in prior times, the ECB have done the accounting smoke and mirrors trick when they wanted to justify policy by, if the headline inflation was up but the core stayed low, they looked at the core number. And it's just something they used to do, as I say, just to justify their policy. If people were thinking, oh, they should get more hawkish because headline inflation's up, they'd point to the core number. But even so, one can look at this data on paper and say, well, the core's softer, so that must mean that the Fed don't need to hike as much. The core is still running well above their target. But either way, if you compare this to like the CPI data, it doesn't look as hot as that, and we've seen that reaction in markets, and more so the theme that markets are thinking that there's going to be big recessions coming, and so they think central banks are hiking into potential problems. This was always going to be the case, as we spelt out long before, the stagflation fears, that sort of thing, and the market is taking that to be real at the moment. Plus, obviously, we've had all the end of month stuff going on, so we'll talk about that. But generally, the theme is, and really taking all this data, and we'll go over some of the other numbers, but taking all this data at the moment and what some of the markets are telling us in commodities and things like that, is that potentially we are seeing recessions coming as far as the market's concerned, and that's going to be a problem for central banks. But I'm not going to take too much to heart on some of these moves we're seeing, because we have had the end of month just roll past, and it has been a big one. We may still be seeing some of that fallout today. We've got a US holiday on Monday, so firms setting out their trades for the second half of the year, maybe rushing to get them in before the market close, which actually closes early today in the US. I think bull markets close at 2 p.m. US time, so it's a half day over there. So really, until we get to maybe Tuesday, Wednesday, and we see then what markets want to do, I'm not sure how much I believe some of the moves that we're seeing strong than they are. But anyway, let's just crack through the rest of the data, and then we'll get into the charts. Kay, I know you've been keeping an eye on this one. The Japanese data a ton out overnight as well. CPI, obviously. Do you want to just your highlights?
Yeah, just leave it on there. We do have to mention late last night about this Atlanta Fed nowcast, or I don't know how it's called, and that they were hinting at a bit of a recession already happening. Their model says that the Q2 GDP in the US may come in at -1%, and I think that spooked the risk markets overnight. We've seen like all yen pairs absolutely getting drilled, and dollar yen trading sub 135 with all yen crosses following suit. So the Japanese numbers got a bit lost in all of that, but it brings me back to what I'm saying. In yen terms right now, we have seen, as you mentioned, Ryan, the automakers are struggling because they are really struggling with the supply. The numbers coming out overnight, although in some areas we had a bit of an improvement, it doesn't improve the way they want. And if you take the Tankan, for example, on the large manufacturers, it dropped 5 points, which is not a small feat. The outlook rose one point, but then the outlook is an outlook, right? That's not a firm number. We've seen the small manufacturers staying in negative territory. It's not good in Japan right now. So transpose it to yen trading, even though yen strengthened quite a bit because global yields were coming off because of the data, or the market really trying to read the data as being negative now. The global yields came off and yen strengthened a lot, which brings me also back to the theme of the yields. Even though equity markets also came off for the same reasons, but then we see regular bounces in those equity markets, and yet yen has been strengthening over the past. We did the high yesterday in dollar yen. As I said I wouldn't be surprised if they print a high. Then we had this big failure, but then it was really down to yields coming off globally. We've seen that, and people should look at that because yields are really moving in tandem one with each other, whether it's the US, the European yields. We also saw UK gilt yields, the commodity currencies, they were all coming off. So that's the main reason for the yen to strengthen. But for economic reasons, it's not the case. So I'm still very careful of being long yen against the dollar, for instance, for more than a couple of sessions. Of course, if global yields continue to tank, the yen will strengthen, and if commodities continue to tank, the yen should strengthen, because a part of this yen weakness is down to high energy, high commodity, lack of supply, and all those things. But if you take parts of it away, like the high yields, if yields come lower elsewhere, and if the commodities tank, and energy tanks, the yen should actually regain a little bit. But I'm still very, very cautious on being long yen for too long. So that about numbers.
Yeah, what do you make of the Tokyo CPI? Obviously, it's not the national one, but it's a quite an important metric as well. The core was up, but the headline was down.
Yeah, which is let's say a bit logic, because it's the capital with the most turnover in goods and in services. Tokyo is somewhere 25%, if I'm not mistaken, of the global Japanese GDP. I think it's around there. I can be a couple of percent off, but I think it's around there. So it's very important, of course. But Kuroda has already said that they think it's not going to be long lasting. But as we have been saying, it's a really complicated, a bit complicated mixed bag about what's going on. But indeed, the core is also above 2%. If the core in the whole of Japan starts to print above 2% for a couple of prints, I think that will only increase the pressure on the Bank of Japan. Still, I mean, I'm of the same view. I think during this fiscal year at least, and I'm not taking a big bet on this because it's a pretty long timeline. But I still think if there would have been a window at any time over the past 2 decades to do something in Japan about their YC, the yield curve control, or the ETF buying and stuff like that, actually they could keep that, but they should really take advantage of this, because let's say the local banks are suffering from this very tight control, and Bank of Japan is holding more than 50% of the JGB market. I mean, it's not really logic. So they should do something. I'm not saying it's going to happen in July, but July sees the Bank of Japan members coming out with their new metrics, and we might get at least some discussion about doing something, especially that we have seen now as well that the other major negative rate central bank S&P is also on the move. They're last in the pack, so we should expect at least something. So that's for Japan.
Yeah, cool. Okay, well, let's quickly move through some of the other data. We got another China PMI. This one, as I mentioned yesterday, one of the third-party ones, if you like, or the non-Chinese orientated derived state number. That also went into expansion, 51.7 versus 48.1 there. So again, something we're going to keep an eye on. If that's going to be sustained, would point to further easing potentially in supply chains as the country comes out of lockdowns and all those big ports, coming back online and pumping out the ships. For the rest of the PMIs through Europe, these are mainly the final numbers. So pretty much there or thereabout, slightly better in some over the flash numbers. France, Italy, Spain, Germany. Well, Germany was unchanged actually. Still down mostly on last month. We'll see whether that's going to really crater into contraction over the months ahead. In the UK, the manufacturing PMI there came in. I've forgotten it now. Came in just worse actually than it was on the flash number. Quite a decent size revision. Don't often see them that size. Mortgage numbers, something I look at, just keep an eye on to see how the housing market's doing. That came in up in May. Potentially some front running of the expected Bank of England hikes, especially in the mortgage lending numbers. Sometimes that can have that effect if rates are scheduled to go up. People tend to go and lock in mortgages at better rates. So that's part of that there. But really, the big number this morning was the Eurozone CPI data. And that was a 5-pip jump in the headline to 8.6% from 8.1% prior. But again, another divergence in the core number. It dropped to 3.7% from 3.9%. And sorry, from 3.8%. So really, how does that factor into this 25 pip, 50 pip argument for the July meeting? In my opinion, you can look at the core again and draw a conclusion that the core wasn't as hot. So perhaps that moves things onto the 50 pip mark, but the 25 pip mark. But I think that the market is going to look at that headline number, nearly 9% or closer to 9% than not, and that's what it's going to reflect on. And I think in the market's mind, that's going to push the ECB more to the 50 pip side. Whether it actually does that, as far as ECB is concerned, well, that's to be decided. But Lagarde made it clear that the decision is going to be predominantly based on this report today, and it wasn't lower on the headline. It was quite a jump higher. Just look above that. Look at the jump in Italian inflation. CPI 8% from 6.8%. In the Eurozone metric, 8.5 from 7.3%. Inflation is here, and it's hot in several countries now. So I think, on balance, if I had to pick a side, I'd be with the 50 bips for July right now. What we need to find out, obviously, when we have the July ECB meeting, is what they see the path now. It's going to be all about the path. If they hike 50, does that mean we're still going to get 50 in September, or they're going to dial that down, or are we going to start to hear chatter about 75 pip hikes? So as I've been mentioning this week, I don't think the real pricing is between whether it's 25 or 50. I think the real pricing is what the path is going to be going forward. But as we get into that meeting, if the market is leaning towards 50 pip hikes, then that's going to make a 25 actual hike the bigger price risk, because it'll be a big disappointment for the market. And conversely, if the market is pricing 25 pips when we get to the meeting, the bigger price risk and where we'll get the bigger moves is if they go 50 and set that higher path. But on the basis of what Lagarde said this week, that inflation is hot, in my opinion, and that's certainly going to get them acting in July and talking more hawkishly, in my opinion. So let's have a look at what's been going on in some of the prices. Lots of fun and games going on. Obviously had the month-end stuff rolling off yesterday, as we've been speaking about. And that pretty much marked a low in the euro. We started seeing stuff coming in, well, all day really, but it was that last little flood, and it was just before the fix, actually. And as it came into that period, we got those lows, and I was sitting here watching it. I know some of the guys, I know K-Man jumped on it. I was wondering if we were going to get a push down to those prior lows and that big old 103.40 area. And it was a bit of a test for me to sit on my hands and not jump in too early. But we never got down there, so I didn't actually get on it. I know some of the guys and K-Man picked it up in the 103.90s or just above 104 after the break, and then pretty much wallop, shot straight back up, and it was pretty bonkers in a lot of pairs. A bit of balance today. I don't think we didn't get much of a move over the Eurozone CPI numbers. So I think there's a little bit of wait and see what's going on. We are having these moves in yields, and as Kay mentioned, and there's been this morning a bit of a divergence. If you look between the US numbers and UK, European bond yields, we've got a bit of a divergence here. Yields are up in this side of the pond and down on the other side of the pond. As Kay pointed out, that Atlanta Fed forecast, GDP forecast, perhaps reiterating the fact that these recession worries that are coming in. We're seeing commodities crap out again today. Copper was down under 8K again. That theme's continuing. Although there's been a lot of end of month stuff, as Kay mentioned, within all assets, stocks, commodities, across the board. There's been a lot of goings on. So again, I'm not entirely willing to buy into all the rhetoric just yet until we get clear of this period. But certainly from a technical perspective on the euro, we had the break of 104, but it got back above really quickly. So that's reinforcing the range, a bit like up at 106. We had these little moves above. Does it mean the picture's changed? Not really. As we've seen from the CPI numbers, there's no reason why the ECB should start going backwards. And this is what I've been looking for over these end of month moves, looking for the trades. Are these prices being pushed out of kilter with what's going on in the fundamentals? I believe that's what we've seen in euro dollar. I didn't get on that one. As I say, I was looking for, trying to be choosy and pick a move lower, but there was some key levels going in other pairs that we made hay on. This one, which as I mentioned, I piggybacked on the back of Kay. He was the one who first highlighted this level here. We get the chart up properly. EuroCAD. This one I did jump on. I did have some stop reverses running for a long time for a potential break. I pulled those for the month in stuff. Jumped in here, 134.11. Still in that. Been chopping it on the way up. A good solid technical level, a good solid bounce. That's what you want to look for. But it's not been all that way in every pair. It happened over the fix. Things look solid. You know, again, another one that the K-Meister highlighted, the big, we spoke about it yesterday, the big 62 in Kiwi. You know, it held yesterday on the fix, pretty much. I took a long in that, was sitting pretty, took a bit of money on it, woke up this morning, stopped out on the trailer. You know, there's been a big breakdown, and this and things like Aussie have very much been, I believe, commodity led. You know, really big breaks we've got of some of these levels. Oh, if I can get it working. What's going on? Mayday, mayday. There we go. So, you know, big levels around the low 68s, been busted all the way down to the big figure and before and below 68. So big breaks on these moves here. Part of that is probably technical with a lot of stops underneath these levels, but again, it's this negative mood that's coming in from commodities that we're seeing, that we're getting these big breaks, and it's been a bit dangerous to say the least. You know, these moves, you wake up, you get in a position, you're sitting pretty. When you go to bed, you wake up in the morning, you're potentially stopped out. You know, there's really not a lot we can do about it. That's life. That's why we use stops. Very important, obviously. What do you make of it, Kay? Just this move, particularly in like the commod currencies.
Yeah, it's really
that. Do you think it's real, or
it's really that? I think there's a lot, as we were saying. This was not only end of month, but end of quarter, end of half year. There's a lot of books, portfolios needing to be rebalanced, readjusted, and I'm not sure whether it's going to reverse today, whether they have more to do, or whether they will wait until after the long weekend on Tuesday to really push some buttons and get back into assets or trade recessions. Or my conviction level, at least for today, is very low. But we have seen over the descent of month and then spilling over into Asia, the move in the antipodiums, the move in the commodity currencies. Actually, the one that is holding, in my opinion, relatively well right now, for now perhaps, are the oils. So, and that's why the Canadian dollar, makes to a certain extent, Norwegian kroner are not really falling out of bed. But the rest, we have to be a bit careful. So I was in, I've bought a few euros yesterday because, as I'm always saying, into end of month and especially end of quarter, end of half year, because the end of months are getting a little messy those last months. But I'm really watching the clock more than really watching the tech levels, although the major ones needs to be respected, of course. And that's the reason why I bought a few euros. And the euro actually did its low around which is not a real actually traded fixing anymore, because they are not official anymore. They are only reference rates. But around the ECB fix, we did the low in the euros, and then I took a punt long on the stuff, thinking that it might be done for the 4 p.m. and which was right, luckily. On the Kiwi, I did exactly the same. I bought Kiwi against the 62 level, managed a little bit of it, and then got stopped out on the rest overnight. I mean, you have to respect the levels. If it doesn't work, it doesn't work. Move on. And then, very nice pickup on the Euro CAD, Ryan. I mean, the level is starting to really be a monster level. It's the gateway to 130 or not. It's clear. It's the gateway to 130 or not. If these things break 133.90, 134, give and take a few algo pips, it's really the gateway to 130. This thing, in my opinion. So, if the global economy does not completely collapse or go into deep recessions, I still think there is a chance. if ECB doesn't press the 50s and 50s all the time, but Bank of Canada is among the most hawkish central banks right now, I still think there is a chance for this to break one day, but I don't know where, when, and for the time being, we respect that level. If you want me to grab the screen, I can go over a couple of
Yeah,
things.
go ahead, mate. Go ahead.
All
Let
right.
me stop that. Just while you're doing that, I'll just look at some of the comments going up. Oh, right, all yours, mate. I think. Jordan, yeah, you had the same in Kiwi as well. It was funny because as I say, I was watching some of the moves, keeping an eye on the clock. I didn't want to go too early before the 4 p.m. Fix, and I missed the first move in Kiwi, but I then did a manual because we got to move back down towards there, a secondary move down there. But all these trades in EuroCAD and Kiwi, I put a big wide stop on it over the fix because I didn't want to get shaken out in potential fix moves. I didn't want to go with a 20-30 pip stop and get flipped out only to see it bounce again. So I had big stops on them. And what I did after, as soon as we got over that and things calmed down a little bit, I brought those stops right up. So probably one of the best trades I did yesterday was moving the stop up on the Kiwi. I still lost a bit of money on it over the slice I took off for 20 odd pips. But that's why you need to manage stuff, because I brought my stop right back up to a sensible level, 61.75. So I didn't get spanked on it. But this EuroCAD, I've put my sell stops back in. I pulled those over the fix again. Didn't want to get flipped around in any noise. I've got those back in to reverse short at 33.80. I still think that's a potential good break trade in that one. But yeah, it's all about trying to manage the risk at the time. And it's been tough seeing a lot of people, get caught out on Aussie and Kiwi. But that's why we use the stops, and you come back and you find another trade. Anyway, sorry, mate. I'll let you.
No problem at all. Let's go over to a couple of the funky stuff. Gold, silver, they are not feeling too well. I still think we broke down here and retested it, even went back above, failed again around these areas. And as soon as we went below these 1806 or 07, we did another $10. I'm not inclined to call the life of gold over, because I'd rather wait for a flush out to try and catch a knife somewhere if people really start to panic. I think if we go down below 80-90, we can see this flush out coming, perhaps another $30, or why not another $50. But do
you think it's catching at gold from just the general commodity news? Because it's gold and silver seem to be ignoring everything that was going on elsewhere in oil, in metals, and everything else. Yeah, do you think it's just been the weight of pressures finally caught up with it?
Yeah, I think a bit of a scare on the commodities as well, and on the a bit of recession fears setting in. But the one that I usually watch more for trading recessions or positive economic developments is silver, because it is an industrial metal more so than gold, which is more of a, let's call it, or in big terms, an inflation trade or so. So silver really had a crack here. I was telling about this 21 zone for a long time, 2090. We tested it, capped, and then we started to go lower. And as soon as 2045 went, we really had this acceleration on the way, this acceleration lower. I think we need to be a bit patient still to see what the market really wants to trade. But it is possible that we are going to have a look at this 1870, 1915 zone. It is very possible. But if it gets down there, I'll be ready to catch a knife. I'll be ready to catch a knife. Let's see, because slow down, yes, but I'm not really sure that the world is going to collapse yet. So I might be really trying to catch a knife if we get down into this 1870, 1900 zone. Greg also made a nice piece on it in the on the Trader Summit page if you care to go and have a look at it. Moving on to a bit of other stuff. We've seen this dollar rand. We've seen this overshoot of the yesterday of the 32, 36 resistance zone. Had a quick move up to the next level, which is around 1649, 1650. As it came back, I thought we may have a false break, so I tried a bit of a short. But then looking at how risk was trading this morning, I decided to take a bit on it and then just wait for the weekend to go over and see what happens next week. We had a setback down to mid 1620s, which is a bit of a level here. I think it needs to go down below 1625, 26 again to really call this one the risk of this shooting higher over, and we can head back down again. Similar happening on the MEX. Was a bit undecided. MEX is still one of the ones who behaves pretty okay, because since we've broken this 2026, we had a retest, and it's hesitating. It's hesitating to try and get back above it. So I think on the mix, I would dare to be a little bit more positive on mix dips because of it being such a high yielder. But we have to be careful for the data. Now, since we are, sorry, I squared up my short euro mix into month end as well. A bit of uncertainty. I'm still not wiser, I must admit. Today, after the European CPIs, it seems the market agrees with me. The euro dollar, for instance, is not moving a lot. Euro has been whipsawing against other currencies, but I think it's more a problem in the other currencies than a euro story. If ever we get back up to this 21.27, anywhere between here and 21.40, I would like to give it a try again for as long as we stay below this level, because I think in the end, interest rate differentials will still play a role in this cross. For as long as the global economy is not completely collapsing. Anything else? Yeah, we've seen a big move lower in sterling. In sterling this morning, and is it on the back of the PMIs that came out weaker than all the rest, or is it a delayed effect of uncertainty around the meetings that we had, Bailey and things like that, or did we just break technically this 126 121 0510? I'm not out of it. It seems that the fresh flows are like I'm not sure whether it's cable or whether it's euro sterling or sterling crosses that are getting hammered. But at least it's putting a bit of stress again on this low 120 in the cable. I'm not out of it. I'm not doing anything. I really want to see what yields are doing, and it's a bit funny because as Ryan mentioned, the UK 10s, the gilt yields are not really coming off again. They are not really coming off. They're actually going up a bit. Yet sterling is getting hammered. It might just be euro sterling, you know. So euro sterling, I've put this trend line in for a while ago, and this is to me a pretty decent level, 86.60, which we are turning around, which could be decisive for the end of the start of next week perhaps. And then I have the same level, I think, as you have, Ryan, which is 87.2025. Big one. Yeah, that's going to be the big one, right? On the euro sterling. It's funny because I've been trying to buy euro sterling a couple of times, and I've lost a bit of faith. And then now it's moving higher. We had actually this trend line which held around the 85.5 earlier. Actually, yesterday was it over the fixings when people were hammering euros through the end of month fixings. Yeah, so this thing is could be setting up for a break or range trading 660, 85.5, somewhere there. This yeah, it's really moving higher. Okay, this is about it for me, Ryan, for now. As I'm saying, as I've been telling in the room as well, I mean, it's a low conviction day for me. I was happy to short those dollar yens yesterday on the overshoot, like many of the people in the room actually did. So I mean, congrats to all the people who for various reasons actually went short dollar yen yesterday. We were really a nice troop being short dollar yen, and I hope everybody took the profits on the way down. I've closed everything around 135 this morning, and because, oh yeah, this is what I wanted to show really. I think this 134, call it quarter half, is going to be quite important in my opinion. This is important for the bulls because we've seen this like kind of megaphone. We were short yesterday for different reasons. There was a technical reason, 137, sorry, 2040 was quite a level. We hit 137, the figure just, and some of us like Ryan, I know, Shohan, and I think Shohan and other people, they went short right at the top. I waited a little bit to see if it had any legs, yes or no, and then looking at the yields moving ex-Japan across the board lower, I was saying like we're completely out of sync with the yields. This may be done, you know, and in fact it was done, and then we had this sharp move lower as usual, taking some small slices off on the way down, and then I took the rest of this morning because again, as I was saying earlier on the show, I'm not sure if I want to be long yen for more than a session or two at the time, because I don't know how this Japanese situation is going to evolve further. And also here I was looking at this morning, and one can always try to capture the last move, but there is. It's like driving in traffic, and you approach the traffic lights. As closer as you get to the traffic lights, as harder you start to brake and to make sure that you stop ahead of the traffic lights. I had a little bit of this feeling today. Okay, it was still a pretty decent leg in there, but we did the 134.75 low, and it started to move up again. So I decided to move out of it, but. Pay attention to this 134.25 because I think it might be decisive for a bit more medium-term action. If it breaks below here, why not think about a few big figures more move? So keep an eye on that. I will be for sure keeping a close eye on this level. If we start to shoot again above this 136.20, I think it's overdone and dusted, and we may be printing new highs. But again, today conviction levels ultra low. I'm not going to try too much.
Cool, mate.
That's it for me, Ryan.
Yeah, can we grab them back?
Yeah, sure, man.
Yeah, so I just wanted to pretty much match what Kay was saying, particularly in the pound pairs, euro sterling. I've got this zone that I've had up here that we failed in yesterday on the 29th, but we're back in it again. I'm not sure. I think this is more pound weakness than euro strength, purely because euro dollar's not going anywhere. If that was shooting up while the pound was dropping, then I'll more lean towards the euro side. But of course, it could be the cross itself moving and driving all the others. For me, yeah, this is a bit of a zone, not one I'm overly keen to trade. It's more a watch zone. You know, if we can do this, then we can do that sort of thing. My main zone was for picking up more longs was down here 85, 84, 80. Didn't really get close. It was on my watch list yesterday. But yeah, this 87 level is the one. And if I've got the feeling that this is more pound than euro, I'm potentially going to be looking at trading against my position with a short-term trade, maybe a short. But I'll be looking at to reverse it perhaps in a buy stop if we break maybe 87.20. I think we got up to 17, 18 on. Let's have a look. What do we get up to there? 16 we got up to in that move. So, or was it 17? Let's have a look. Yeah. Anyway, I'll be looking at a stop maybe around 87.20 to maybe catch a break. But I don't have big conviction still that this is a solid move on the euro side, particularly. And that's what I'm really looking for my long-term longs. Cable, just taking a wide view of cable, and you know the significance of 120 is there to be seen. It's always a big level, big psychological level. Apart from the virus flip out, we've not managed a really decent close below for any significant amount of time. So, I mean, again, I'm in two minds. I haven't liked cable. I haven't liked traded cable for a while because it is a bit flip-floppy. It's all over the place. Even as we saw yesterday, you know, it was one sub 121s, then it was above 121 and near 122, and you know, it's up and it's very volatile basically. And I'm not too keen on that at the moment, but you know, level's a level. If we get a test and a hold down here at 120, then perhaps it's a bit of a long trade to try and keep it fairly tight. Maybe go with a reverse into a short if it breaks below, you know, maybe 119.70-ish, just something like that. I'll look at the clock. If this is happening, while I'm sitting in a pub, I probably won't do it. But if this is happening towards the end of the day, where you've got the long weekend coming up, I might be a bit loath to jump into something that late in the day and week to try and do that. And just to give my 5 cents on dollar yen, you know, pretty much in the same sort of theme as Cayman, got the same levels up, and it's good when you do your own technical analysis and you get some conviction because other people are seeing the same levels as well. You know, it's not, sometimes technical analysis isn't hard. You know, the levels stand out. We just put the lines on to give us a better visual aid. Yeah, as Kay mentioned, I was short this one from 137, more of just a big figure trade, as I like to do when we touch a big figure for the first time in a long while. I set I thought an outlier TP overnight at 135.05. I think we were trading up near the 135s 80s when I went to bed. I didn't think I'll get knocked on that, but I thought I'd leave it there just in case, and just in case happened, and I got triggered on that while I was asleep. So fortunate on that one. But yeah, I think now we're middle of the road. I don't like this low here around 75.80. This was the area, the low 135s. If I wanted to see, you know, pure on a technical basis, a price hold, that's where I would have liked to have seen it. The fact that it hasn't shown up as much over this period, you know, do I need to scrap it as a level at all? I'll keep it there for a while just to keep an eye on it. But this makes things a bit uncertain for the downside. I want to see clear, where possible, clear indications of support and resistance. So that would have been this 134.5 area. And as Kay says, you know, where's the upside going to stop? 136 is obviously going to be the first target, purely on the last breakdown. That's where we found resistance. Then we've got this shorter term level, 136.25, 30-ish. That's going to be another boundary. And as Kay says, above there, we may look to the highs. But for now, I'm going to have to let this one go and watch the price action, watch it develop, see what levels it gives me. If it gives us another move down here and that becomes a secondary low, well, then we know where the price is going to sit, and that's what it's going to do. I don't know if you guys and girls have got anything else you want to chat to us about. Gavin, if we look at the pound versus Kiwi and Aussie versus Euro, yeah. Oz versus Euro and Oz and Kiwi. I don't think I've got pound.
Ryan, while you're putting that up,
yeah.
Just a quick message to all the people who so kindly join us all the time. If you like what we are doing, just don't omit and don't hesitate to tell your friends about it, or retweet what we are putting on our tweet handle, either the ForexAnalytix tweet handle or the Forex Flow live handle, and make some publicity so we can have more of you gentle people around, more interaction, better shows, and we're also trying to improve all the time on our side. So the more the merrier. Don't hesitate to get more people on board.
Yeah, well said, Kay. Well said. Yeah, the more we build this show, the more we can bring to it, and hopefully give you guys good value for your trading. Yeah, as Gavin's pointed out there, you know, pound Kiwi, you know, looks an ugly move down from those highs there. Not one I look at regularly, I have to admit, or trade regularly, but you know, fairly looking decent double-ish top up here around the 96s. But yeah, so that just to round things up, you know, what are we going to need to look at going forward? The levels are there. Some pairs it's confirmed, some pairs it's broken. If you're looking at something like Kiwi, what you want to be looking for now is how does this 62 level react? You know, it's already had one half test up to 90s. That's a bit of a confirmation of the break. That's what you can manage your trades against now. You know, can we stay below 62 or do we get back above? If you get a test up there and you fancy that it's going to hold and we're going to remain bearish, that's your pivot level, and that's how you trade it. If you didn't manage to grab the break, look for the next trade. Same with Aussie dollar. And for the rest of the day, we have got some big data. Let's quickly flick to that before I forget it. We've got the ISM. So this potentially is going to be big data again because of this theme of possible recession worries. If we start seeing the big numbers in the ISM going down, that's going to add to what we're seeing probably in commodities, risk, yields and everything. And so far the smaller regional numbers, Empire, Dallas, Texas, Richmond, have all been pretty poor. The ISM bucked that trend a little bit. It wasn't as bad as those regionals last month, but you know, this is the big one for the US. So keep an eye on that one later. It could be a bit of a decider for risk for the rest of the week. Anyway, that's me done. I've got one eye on the door, unfortunately. So if I don't speak to you before, if we don't see you in the chat room, have a very good weekend. Thank you for coming to the Flow Show. We will be here on Monday as normal. It's only the Yanks who get a day off. And have a great weekend. Lots of pips to you all. See you next week.
Speak for yourself, Ryan. I'll be off.
Cheers, Kate.
Cheers. Bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.